Hello traders, Gary Wagner here. Just about 10:40 in Honolulu, 5:40 in New York on Wednesday, the 17th day of September 2014, and this is the daily report for gold and silver. Following statements by the Fed and a Q&A session with Janet Yellen, we have the equities markets, Dow Jones Industrial Average moving to record highs, dollar off like a rocket as if it didn't have momentum to start with, and pretty moderate to strong downside pressure in the precious metals, with gold currently trading off about $13 on the day, 12.21, 12.22 in that area. Now the low is 12.20.90, the high 12.40.20. Silver also trading lower on the day, but in terms of percentage drawdowns, less than gold. Gold trading off about 1.04%, silver off about 0.88%, down about 17 cents, 18.52.62 bid-ask spread on the day with a low of 18.40, high of 18.89. More on silver in a little bit. So traders, I want to start today's show by looking at a simple daily chart. On this daily chart, we have a couple of important features. One is this support line, prior support line, which I now believe is going to be resistance. Resistance is actually much lower than this, as well as a fib retracement. The retracement we're looking at, of course, is from this long rally beginning end of 2013 into March of this year. When we do that, we identified, I believe, to be a pretty critical area, which is roughly at around the 1230 area. Of course, we were late to the party. We did go short. We went short at 1249. Market currently trading, call it 1222, 1223. But besides the action that we had on Monday and Tuesday, we've really been looking at definitively lower pricing. If you look at last week, it's pretty much solid red candles all the way down. Monday, we had that small clip up. We hit an intraday high, I believe, at 42 and change yesterday. High today was about 39, roughly, just by looking at the charts. But the key to me was the fact that as the Fed released information about their most recent meeting, and as Yellen began to speak, we had the Dow Jones Industrials move into record territory. Standard & Poor's did not. And then we saw the follow-through with the dollar just moving dynamically above the potential top action that we saw in the market. And we'll pull the dollar chart up in a second. We really saw a deterioration of gold as it moved below this particular price point, meaning about 1230, and substantially lower, trading currently at about 1222. So traders, this is what I'm talking about. I've just pulled up the daily chart of the dollar index, and you can see the dynamic move that we saw today. Look at this, trading now at about 84.76. We've identified a top at around 85 that we talked about the other day. And really, to see it, we needed to compress the chart, which I've just done. We've got this top up here. We talked about it a little bit yesterday. June market, middle of June market is trading roughly at 80.50. It trades up to this top of about 85. And so that is where I'm pegging our current resistance, potential resistance on the dollar. So what are we looking at in terms of the gold market? Where do we think it's headed? Well, obviously, we went short. We believe that it's going to be under significant pressure. This break below this 1230 area, you can see on this chart, it comes in at about 1231.92. It's simply a matter of where we're setting our highs and our lows, this being a half-day chart, intraday chart. We're currently trading well near the lows, and on a technical basis, as I've said before, once we break through this area, and at that point I said if it breaks through the area, now we can definitively say now that it has broken through this area, there isn't really any real solid technical support areas to look at. My sense is right now that we could easily go and test $1,200 per ounce. These century marks are always important. But on a technical basis, except for a few areas that we'll talk about over the next couple of days, I don't really see it having any kind of major support between, say, now and about 12:10. Interesting developments in the market today with the Fed. Also tomorrow, we have Scotland voting on whether or not they are going to be leaving the British UK itself and separating from the Brits. What effect that might have on the global markets, what effect that might have on the precious metals markets is absolutely to be determined. Nothing like this has ever happened. If it was not for that, I probably would have recommended adding positions to our initial short position that we put on at 1249. For right now, we want to see how this market wants to close, where it wants to close at, and what kind of pressure or strength we see coming into the market as it begins to trade overseas. Obviously, my recommendation is to maintain our current short position in gold. So traders, what about silver? Well, we've sidelined on silver. There's no doubt about that. It's been under dramatic pressure. And as I have stated, I don't see really any real support coming into this market except for two areas. This is one area based upon this low in June and July of last year. And I think that we really have the potential to see silver travel lower in unison with gold if gold continues under pressure. And the price point that I'm looking at as a potential bottom is roughly $18.20 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.